All right, let's dive right in. Today, we're going to decode a kind of secret language, but it's not written in code or numbers. It's written in raw human emotion. We're going to learn how to read the hidden stories of fear and greed that are playing out on every single financial chart. So, when you pull up a stock chart, what are you really looking at? Is it just a chaotic mess of lines and colors? A random dance of data points? Or is it something way more profound? What if I told you that you're looking at a map of human psychology, a real-time chart of millions of individual hopes, fears, and decisions? Let's figure out how to read this emotional map. To really get this, we've got to go back in time. And I mean way back, before Wall Street, before stock tickers, all the way to 18th century Japan, because that's where this whole idea was born. So, in 18th century Japan, rice was everything. I mean, it was the entire economy. And there was this legendary rice trader named Munehisa Homa who had a totally revolutionary idea. While everyone else was obsessing over the price of rice, Homa was watching the people. And he had this incredible insight. He realized market psychology, that collective wave of fear and greed. It always changes before the price does. So he started charting these emotional shifts. And in the process, he invented the candlestick chart we all still use today. And this quote? It pretty much sums up his whole philosophy. He taught that the market isn't some enemy you have to conquer. Nope, it's a mirror. It just reflects our own emotions right back at us. He believed the real battle wasn't out there on the trading floor. It was inside our own heads. So, Homa gave us a language to read these emotional stories. And, like any language, you have to start with the basics, the individual words. And in our case, each word is a single candlestick. Every single candle you see is its own little drama, a four-act play of a single day's battle. The open, that's the curtain going up. The high and the low, well, that's the tug-of-war between the buyers trying to push prices up and the sellers trying to drag them down. The close, that's the final verdict. It tells you who won the day. And that thick part, the body, tells you just how intense that fight really was. And the colors tell you the winner at a glance. Green means the buyers won that day. Optimism was in control. Red means the sellers won. Fear was running the show. It's that simple. A visual scorecard for a very complex psychological war. But listen, this is absolutely crucial. A single candle by itself doesn't mean a whole lot. It's like reading one word out of an entire novel. To get the real story, the full picture, you have to read it in context. You have to read the sentences and see how the plot unfolds. Okay, so now that we've got the basic words down, let's learn to listen a little closer. Let's tune into the market's whispers, those subtle little clues that hint the story might be about to take a turn. This little guy is called a doji. Now, I know it looks like nothing, but its silence is powerful. A doji represents a perfect stalemate. The buyers and sellers fought all day long and ended up right back where they started. This isn't calm. This is the market holding its breath, completely undecided about what to do next. You can think of a doji as a big question mark on the chart. It's a fork in the road. So if a market's been rising and you see a doji, it's asking, are the buyers running out of steam? And if a market's been falling, it whispers, is the panic finally starting to fade? It's a major signal to pay really close attention. Now check this out. These two candles look exactly the same, but they can mean the complete opposite. It is all about context. When this shape appears after prices have been falling for a while, that's a downtrend, we call it a hammer. Why? Because sellers tried to pound the price down, but buyers came in strong and hammered it right back up. It's a sign of hope. But see that exact same shape after prices have been rising? Now it's a hanging man, and that's a warning. It's a shadow of doubt, telling you that sellers showed up with some serious force during the day, even if the buyers managed to win in the end. So, we've heard the market's whispers. Now, it's time to listen for its roars. These are the patterns that don't just suggest a change in direction, they flat out declare it. This is called an engulfing pattern. And yeah, it is just as aggressive as it sounds. Think of it as a hostile takeover on the chart. It's when one day's candle completely swallows and erases the candle from the day before. There's no indecision here, no question marks. This is a powerful, decisive statement that control has just violently changed hands. You've got two main types. After a downtrend, when a huge green candle completely devours the previous little red one, that's a bullish engulfing. The market is basically shouting that fear's reign is over. On the flip side, at the top of an uptrend, when a massive red candle completely wipes out the prior green one, that's a bearish engulfing. It's a major warning that greed is now on the run. So you can really see the difference, right? A doji is a question. A hammer is an argument. But an engulfing pattern, that's a definitive answer. The debate is over. One side has clearly won. And this brings us to our final and maybe the most difficult lesson of all. It's learning to spot not just when a powerful move is beginning, but when it's finally running out of gas. Just picture this. A market that is on fire. Prices are hitting new highs every single day. The news is amazing. Everyone is euphoric, and it feels like the party will never, ever end. This right here is the moment of peak enthusiasm. And just like Halma taught us, this is precisely when the market is at its most dangerous. Because when everything looks perfect, it usually means that every single person who was thinking about buying has finally bought. There's no one left to keep pushing prices higher. And then you see this. The exhaustion candle. It looks like the strongest, most powerful candle of the entire trend, but it's actually the trend's final, dramatic gasp for air. It represents that moment when the very last holdout, driven by an intense fear of missing out, finally caves and buys at the absolute peak. And after that, there's just no more fuel for the fire. The energy is spent.
So let's be crystal clear about this one. This candle is not an invitation to the party. This is the signal that the party is over and it's time to go home.
So after learning to read the whispers, the roars, and the final gasps of the market, Halma's greatest lesson brings us right back to where we started. The single most important candle you will ever have to read isn't on any screen. It's the one that forms inside your own mind, a candle made of your own fear and your own greed. The ultimate challenge isn't really reading the market, it's reading yourself. So the real question is, can you?